It's time to join Montana's very own and your voice for agriculture, Talkin' Ag Lane Nordland, for today's Lanecast.
What is the outlook for the cattle market, herd retention, and of course beef demand? Those are some of the talking points at this year's Montana Stock Growers Association mid-year meeting, and talking about that is Mr. Matt McQuagge. He's joining us here today, an analyst at CattleFax's. And Matt, welcome to Butte, America. We don't call it Butte, Montana. It's Butte, America.
Okay.
What are you feeling about the richest hill on earth here, the old copper town here?
Oh, it's my first time here, so I'm excited to kind of look around a little bit and maybe sit in on that morning talk tomorrow and learn a little bit.
Well, yeah, a lot of mining history, but a lot of beef consumed here back in the day, too, when it was a roaring mining town. But thanks for joining us here today. And obviously, cattle producers are very interested in what is that magic 8-ball moment? How long are these calf prices going to hold up? But of course, demand is a big part of that too. And as you spoke with attendees at this year's mid-year meeting, I want to start with demand. Sometimes we focus on the size of the cattle herd first, but I think the key thing in today's market demand has stayed strong for consumers enjoying beef still.
Absolutely. That's one of the things that we really need to emphasize or recognize, just the difference compared to like previous years, previous cycles, is just how strong, how outstanding that consumer demand is or has been for beef. Obviously, the protein content, the quality, the high levels of upper choice and prime product that we're able to put out there has really been or turned into strong consumer demand for beef. They've rewarded the cattle producers with more dollars in the system. Last month, all fresh retail prices, so beef in the grocery store, came in at $8.50 per pound on a U.S. average, record high levels. And these dollars at that grocery store then create margin in the system that is further divided up amongst beef producers. And so we really have a lot to be thankful for, just in terms, or from that consumer standpoint, and how we're able to sustain these high prices.
You know, we've received criticism from some of our viewers when we're talking about these outstanding prices, especially for calves going through the ring, and it's exciting to talk about higher prices when you're getting $2,100 for a fall delivery calf already contracted here in 2025, and people say, well, you're going to drive consumers away from that. But as you evaluate this data, is there a bubble? Is there a potential bubble where consumers may say, this is too much? Or what are those indicators, and how do you track that? How do you evaluate that and make an educated guess?
So we look at a lot of things. First off, it's just those levels of beef we're able to put on the plate for consumers and how much they're able to pay for this beef, even at these high levels or strong levels that we're able to produce. And then we compare that to chicken and, or pork and poultry. While we've seen sustained year-over-year growth in terms of beef prices, chicken's been relatively flat the last few years. Pork has seen a little bit of an increase, but much lower or smaller year-over-year inflation rates compared to beef. And so that's one way in which we can track that demand at the consumer level.
But again, consumers are still turning to it, so there's really no indicator at this point that they're going to put another protein in the bag.
We have seen larger demand for the ground beef product, and so that is reflective of some consumers being forced to maybe transition down within the beef complex, but they're much more willing to do that as opposed to switching down to some of the competing proteins. And so that's a very positive sign for the beef producer.
Now, everyone always is paying attention to these cattle on feed reports and looking at placements, looking at the marketings, and looking at heifers. And what is the read right now? We just stepped out of a weather forecast that things are going to get dry here, especially in the northern plains. But what has been the trend leading up to pretty much June 2025? And how could maybe this more dry weather impact maybe some of that herd rebuilding or heifer retention we've seen in pockets of the U.S.?
It's going to keep the rebuild slow, a much slower rebuild compared to the last cycle. We have finally started to see a little bit pockets of heifer retention across the United States, but nothing widespread, nothing aggressive. We're starting to see that at the cattle on feed level that you alluded to. We look at heifers as a percentage of on feed numbers. They're starting to drop down a little bit in the most recent report. And so that's one of our first or preliminary indicators. We're also seeing a little bit of contraction between that steer-heifer spread at the calf level. So that's another sign we look for. And then we finally also kind of track the percentage of heifers that make up calf sales. We are still seeing pretty elevated levels there, down a little bit from the past 2 years, but still strong levels, indicating that heifers are moving around some still. That being said, we have seen some heifers that maybe this time last year were destined to go into the terminal supply, but then early this spring were pulled back to the farm or ranch with the intention of being bred.
And of course, if drought is a little, if we have to, make that big decision whether we're having a good productive cow in the countryside or the unknown of a heifer, that's going to be interesting to look at maybe this fall, depending on how the drought goes.
It'll be very important to confirm some of the things we've been seeing and looking for. This has been a very prolonged drought, and so we have had to cull drastically, but on the flip side, most of the producers across the country have realized kind of what that base stocking level they can get away with is, and they've been able to adapt a little bit more, maybe keep a few more heifers, take advantage of some of these lower priced feed stuffs or commodities to supplement that range. But for the most part, producers across the country have kind of realized what that lowest level they can maintain at is, and even if it's still dry this year, we have the potential to kind of be a little aggressive in certain areas.
Now I'm going to say the naughty word, black swan. I don't want to say we had a black swan event this week in terms of screwworm. We had more of like a black duck, Daffy Duck
gray
event.
Swan.
Yeah. Like a Daffy Duck event here because a false report coming out of an online publication in Missouri that false news about screwworm in the U.S. I mean, we watched those markets just come down, and market participants, I don't know if they were being defensive or they just took the opportunity to bring them down. But what was your take as an analyst watching that this week, or maybe what were some of your teammates' reaction to that market dive due to truly false news?
Yeah, so it was very concerning there for about a half hour before we started to get confirmation that it was indeed an unconfirmed reporting. And we have to recognize that first with where we're at in terms of the markets. We've stretched these cattle prices to record levels, and from a momentum standpoint, cash cattle prices and then futures markets, we've stretched those momentum indicators. So we're overbought. The market's due for a correction. It was almost looking for an excuse, and it saw that false screwworm news and latched onto that, and we thought we were about to test the new limit lows down on the very first day. Wound up being false flag. Markets rebounded some, but we're still lower on the day. But that does also, it gives us a bit of an insight into what will happen in the event that screwworm does cross into the United States here in the future. We will have to recognize that there will be a market reaction, probably lower in the short term following such an event occurring. Though longer term, it's perhaps a little bit more bullish to the market as it increases that demand for those animals. And so there will be a lot of dynamics there, and we did get a little bit of insight into what could occur if and when we see that actually do occur in the United States.
And it's just screwworm.
Yes.
I mean, I can't imagine FMD, and I don't want to either.
Yeah, we do have to. Yeah, exactly. We have to recognize that there is not a human consumption concern associated with that. It's strictly on the management, health, transportation of those animals.
And, as we look at that too, obviously the border is closed to live cattle imports and other livestock categories as well. We saw that in 2024 as well, and into 2025. Then that was lifted. Now President Trump's USDA has put into effect that halt of cattle imports coming to the U.S. How has that impacted, obviously, supplies coming into our feedlots, but also how has that impacted the price, too, that folks are receiving here? Because, there's a lot of folks watching this that say we shouldn't be bringing in cattle at all. There's other folks that say we need to keep the pipeline fed. What do the numbers tell when it comes to that conversation?
Yeah, so we have to view it from both the price standpoint and then an overall system dynamics issue. Starting with the price or just overall supply. Year to date, we brought in 225,000 head of Mexican feeders. Traditionally, a large portion of those would go onto grass a little bit before entering into the feed yards, but because of the backlog and the delays, most of those crossing in earlier this year went straight into the feed yards at a heavier weight than what traditionally occurs. But that is a vital source for particularly the Texas feedlots or southern feedlots. And so as we think about how that impacts placed against supplies or that available slaughter mix later this year, it's going to really draw down on that in that November, December time period, and then again into the next year. And so that does create a concern as these feedlots have seen a few years of dwindling supplies. It's really forcing them to kind of look ahead a little bit into their potential to be able to maintain capacities and what that looks like. We do have to recognize that that does create risks if feedlots have to make the decision to shutter their or close their bunks. That does create a concern to the industry. From a price standpoint, though, that border closure has been very, very favorable to feeder and calf supplies. I mean, already supplies have been very tight. Stocker operators have been forcing to compete for limited supply of calves. Likewise, feedlot operators are having to pay more on a reduced supply. And what that's done is it's really enabled these prices to continue higher than what we might have originally predicted at the start of the year. And it's also impacted that seasonality of those prices a little bit too, particularly on the calf side. Typically, calves run up through the first part of the year, and then it's usually kind of an April high or so before dropping down a little bit, leveling out through the summer. And this year, prices have continued up until last week, or continued higher up until the last 2 weeks. And so that's a very clear indicator of that reduced supply and then fears around future demand or future inventories. From a feeder standpoint, it keeps us in a more range-bound market where we're currently at, reduces potential for drop-off later in the year. And then as we think about how that impacts the overall cycle, that's going to enable us to maintain these higher prices perhaps a little bit longer than we might have originally expected. Obviously, that border issue is being evaluated on a month-by-month basis, but we have no idea of knowing how long it remains closed. And so we're going to have to continue to adjust our numbers on what that overall fed slaughter mix looks like late this year and all through next year.
Now, a lot of folks are thinking of that last cattle cycle when we saw those prices come up in 2014, and then just how quickly producers could rebuild the U.S. cattle herd because the conditions were right to do it. And so folks are always, I think, a little bullish, really bullish during times like this, record low numbers in the countryside. But as we compare that last cattle cycle to now and to look to 26 to 27, 28, 29, what is the read on that right now as we compare the historical averages but also consider the weather factors and just the state of the cattle herd right now too?
So starting with the previous cycle, that cycle low was in 2014 from a beef cow herd number. But the few years before that, 2011, 12, 13, we'd already been seeing increased retained heifer supplies, increased retained heifer inventories, to where when we hit that high price, we were able to kind of take off and run and regrow that herd very rapidly. We have yet to see a year-over-year increase in replacement heifer inventories in this cycle, this go-around. And that's based on that January 1 cattle inventory report. And so that's a big difference, is that the supplies just aren't there. The heifers just aren't there to have a fast-acting rebuild. A lot of that's just been due to the high prices and sharp memory of the last cattle cycle. A lot of producers are just taking that money. It's hard to say, why would you want to keep a few more females when these calves are worth so much? It's easy to make that decision. Well, I'll just keep a few more next year. This year I'm just going to go ahead and take that cash and run. But yeah, it's going to be a much slower rebuild this time around. And that's actually, it'll be a challenge for the overall industry to navigate how we manage such smaller supplies. But it's also very supportive to maintaining higher prices through a longer period of time.
And when we're looking at that time frame too, that's everyone's asked, how long is this going to hold? Well, what are the current projections from CattleFax on where these prices can stay $1,900 to $2,100 for these fall calves? If I can learn to talk here, Matt.
So we'll start with fed cattle, just from that price standpoint. Like when we think about how that cattle cycle occurs and that shifts. 3 out of the last 4 cattle cycles, the high-end fed cattle prices occurred the same year as the low-end beef cow numbers. And then one time it was actually a year delayed. And so we expect to see that again this year. Right now, we're currently targeting 2025 as being the beef cow herd low in terms of beef cow inventory numbers. And we think that fed prices will maintain a high level, perhaps or quite possibly and likely higher into the next year, into 2026. And so what that means is that feeders and calves have a longer tail, and so they don't see their high until another year or two following that. And so that's very supportive to maintaining these higher prices, at least for another couple of years, as we have yet to see again. Very few heifers retained, meaning that their subsequent calf crop, that supply low, is going to be in 2026 or 2027. And so that's, again, very supportive to maintaining a longer tail at higher levels. And even after that point, again, with the slower rebuild, it means that we won't have as sharp of a roll or a drop-off when we do finally reach that cycle high.
It's going to be fun for the guy that has quite a few heifers on hand that he could maybe sell to the neighbors or run through the ring, because he'll probably see the highest price he's ever got for a bred heifer ever.
Yes.
when the rebuilding does take place.
Absolutely. And with our current projections, even at these high bred heifer prices, it's still a pretty decent buy compared to the long-term average. And so this year and next year is the best opportunity to take advantage of that before, again, we start to see a little bit less or reduced return on investment for those females.
Well, it is an exciting time, but it's also a cautious time as we look at all these market fundamentals, drought, and of course just the size of that herd in the countryside. But I know you got a busy day. There's folks for you to meet here at the mid-year meeting of the Montana Stock Growers. What's a message you have for the cattle producers that are listening or watching to this conversation about your role, and what excites you in your role? What makes your job fulfilling in serving cattle producers?
The best reward is getting to interact with the producers and help them make decisions that ensure the longevity of their operation. For some, it's helping create risk management strategies. I mean, you just mentioned these record high prices are fantastic, but high prices also mean increased cash risk, particularly in a volatile environment where we've got a lot of outside factors to pay attention to now, more so than we've ever had to watch. And so being able to kind of help producers manage that, navigate that environment, and implement strategies that, again, can help their operation continue not just this year, but into the future is really the most exciting part. Being able to get on the phone with the producers in my region that I cover and helping them answer questions is the most fun part,
Well, again, I thank you for taking a few moments with us just to talk about this cattle market. It is fun to watch, and again, there is so many unknowns right now too, and there's a lot of risk out there as well.
There is.
Well, again, thank you so much, Matt, for joining us, and for everyone for joining us today. And of course, for more information on all the resources that CattleFax provides, they can be in your inbox every single Friday with their recaps. Or if you like snail mail, you can get those recaps in the mail as well. And of course, a great time to learn more about CattleFax projections is during the NCBA and Cattle Industry Summer Business Meeting, and of course the big announcements that take place during CattleCon. That's going to be in Nashville in 2026, where the big CattleFax announcements always occur. And again, Matt joined us here today, and thanks for joining us for more of these conversations. And I thank you for joining us here on the Lanecast Ag Podcast. I'm Lane Nordlund. We'll catch you next time.
Thank you for tuning in to the Lanecast with Talkin' Ag, Lane Nordlund. For more on Lane, check out his Facebook page, Lane Nordlund Ag Broadcaster, and NordlundCommunications.com.